Stocks are firm in the NASDAQ, the S&P as well by a couple basis points, but there's a little trouble in retail land after a pretty big sell-off in Dick's, a drop in Macy's. I got Tom here in studio ready to do some trading. We got Shana Sissel on the line joining us from Banríon Capital Management, the president and founder. Shana, the retail consumer having a little bit of trouble here today, and it seemed like some of this we can put on a few particular stocks, but of course we're all very kind of sensitive to any negative news on the consumer. What's your read?
Well, my read is twofold. We had really good, actually better than expected retail numbers last week. So it's a little bit surprising, just you wouldn't necessarily expect. But we are seeing a move from goods to services. The other thing to note is, you know, when it comes to Dick's, they talked about shrinkage and loss. And I think that's a trend we've been seeing quite a bit with these retail names. And when it comes to Macy's, the thing I found most interesting about that is they were talking about the rising delinquencies and for their store credit card. Store credit cards tend to be down in terms of credit quality a little bit more than, say, your traditional Visa or MasterCards that are issued by banks. So I would keep my eye on that as well. So there were a couple of things that kind of stood out to me in that respect. The move from goods to services, I think, is showing up. But the other thing that I found notable was the Macy's comments about their credit cards defaults.
Tell me about that, because there is this lingering concern that all our credit card swiping is going to catch up to us, but there's always a debate on the other end. People will say, oh, well, you got to look at the credit ratio to this, or, well, yeah, credit scores are better. You know, there's like this never-ending argument over whether or not this is the great next shoe to drop.
Yeah, I personally am finding that concerning. We've seen rising credit card usage across the board. The question is, how much is debt and credit cards really driving the consumer spending? It seems like a lot. But again, I point out that store credit cards tend to be lower in credit quality. So the uptick they're seeing may be an indication of continued stress on the middle and lower income consumer, which we've seen with some of the reports from some of the Targets and Walmarts and the like. So just something to keep an eye on. That's my key takeaway. I'm not, it's not a huge red flag, but it is concerning considering we've seen an uptick in credit card usage across the board with consumers.
For sure. How about the housing connected trades, home builders versus improvement? Is there still some juice left to be squeezed from that trade, or did we lose it when the 30-year broke out last week?
Well, I do think the 30-year breaking out and 10-year getting over 4.3 is concerning. One of the reasons why new home starts did better than expected was single-family home purchases were up. A lot of the home builders are buying down rates, mortgage rates, and that's sort of the incentive. They've been able to keep buyers interested. But as rates go up, it's going to be harder and harder for the home builders to continue to do that without, hurting their margins. So I do think that's cause for concern. In terms of the home improvement, you're seeing less focus on large projects. Home Depot's numbers weren't great last week, and it's expected that Lowe's will kind of follow suit. So the stocks both sold off last week. It'll be interesting to see what they do today, but it is cause for concern.
All right. Home builders got hit last couple of days. Lowe's today up 2.5%, almost 3% now. As far as the Home Depot versus Lowe's story, I guess not quite as much attachment to rates to some degree. I mean, more like an improvement to spending story.
No, I think that's true. But Home Depot noted that there was smaller ticket sizes, less large projects. I think that the consumer, again, is starting to think about services and less about goods, and they're thinking about experiences, and you're seeing that shift. While the consumer may be healthy, how they're spending is changing. And quite frankly, most people did a lot of work on their homes during the pandemic. So, how much demand is there really to continue to do home improvement projects?
True. Love the thoughts. Thanks, Shana. Glad we got you.
Thank you.
Absolutely. I got Tom here ready to do some trading. Okay, Tom. Let's start with Lowe's there.
Yeah.
And stock's doing good this morning.
It is. It's off its session high.